loans, 100% financing. Must be a veteran to qualify. You obviously have to have your DD-214. You have to have the eligibility for your veteran benefits. Primary residence only. 620 minimum FICO score. No mortgage insurance. If they're a disabled vet, there's no funding fee, or there might be a funding fee of about 2%, which is also financed. Max seller contributions. Actually, this is wrong. Cross this out. It's not 6%. It's 4%. See? Learning new stuff every day. Okay, full documentation. The appraisal process is a little slow, so if you get a VA loan, I would recommend at least a 45-day escrow. Typically we can move them along a little bit, but the VA actually has its own appraisal system, and so you have to kind of adhere to their process. Buyers are not allowed to pay certain fees in the loan program, so get with me if you have any questions about that, because basically the escrow company just flips them to the seller side if you have a seller credit, and it's all equals out that way.
What percentage would you calculate in your contract that you seller to pay veterans closing costs not to exceed what?
Well, you can't have it exceed the 4%. It's tricky, okay? If you don't have any closing costs, if you have no closing cost concession for the buyer, the seller still has to pay these things. The seller has to pay the escrow fees, the lender fees like underwriting, processing, doc prep, and even HOA transfer fees. That's a requirement of the VA loan. So it's tricky. If you have a VA buyer that has a little bit of money in the bank and they can cover their own closing costs, it might actually benefit them to go in with a lower purchase price, have the seller pay some of those fees, and then they come out of pocket. Otherwise, you're maxed at 4%, and the seller is going to end up paying these fees anyway, but it comes off the 4%. So have everybody? Because it threw me for a loop the first time too. My thought was, well, if the seller has to pay that anyway, don't they take care of that and then I get the 4% also? That's not how it works. If you get the money up front from the VA, from the seller for the closing costs, they just take it out of the whole.
So it's 4% including the mandatories.
Yes.
Right, but do you have a percentage amount that you say for the mandatory or not? I mean, is that a 1% maybe, or 2%?
I think your question is there a mandatory amount that it'll cost to close the loan?
I guess.
Is that the question?
Well, yeah, I just, like when you write the contract, you know, you need to be specific as to someone to pay mandatory VA costs, and then you need to be able to say to that listing agent that doesn't know how much that would be. So would that work out to be 1%, 2%?
Okay.
Do you see what I'm
Gotcha.
saying?
Yeah, there's no fixed and hard rule about the percentage, because
Do
there
you
are.
have any idea what it usually works out to be?
No, because it's completely different based on the purchase price. If you have a $75,000 purchase price and you have fixed fees like a $399 processing fee or a $650 underwriting fee and your loan transfer fees, those are fixed fees. So that as a percentage of your purchase price is going to be different if the purchase price was $150.
Usually escrow can give you the best numbers anyway.
Yeah, I mean, it depends on who the escrow company is. I would just get with them and let them know, hey, VA does have some certain required fees. You know, you're going to have to take care of this, this, and this. And the lender should be able to let you know that as well when you're putting the whole deal together.
If there's any excess, can you use it to pay taxes or something like that?
If there's any excess in the seller's concessions,
Right.
yeah, it's a use it or lose it. So you have to use the closing costs. You don't get cash back. I usually recommend doing HOA prepaids. You can also prepay
Taxes, insurance.
you can prepay taxes, insurance, whatever the lender requires, or you can do a rate buy down.
If the on that funding fee for the disabled veteran, do they have to be disabled as a veteran, or can they be disabled after the fact?
It's typically because it's a VA loan, you have to be disabled through the service.
Okay.
Yeah, and then that's when the funding fee's waived if they're receiving disability benefits. Any more questions on VA? I touched on it very briefly.
How would you recommend getting by or through to a veteran who's not expecting to have to put any deposit down for the purchase?
I would tell him that, you know, a deposit's like holding a reservation, and you have to put a little skin in the game to be part of the game. And you know, the VA could require upwards of $1,000 after it's all said and done, depending on how you structure it. But anywhere from $500 to $1,000 should be expected for any purchase offer. I would probably say, well, if you were a seller, would you accept an offer without any kind of deposit or good faith money? Maybe something like that.